SCHD, the Schwab US Dividend Equity ETF, just announced their Q3 dividend payment, and the amount per share is coming out to about 0.2604, and the ex-dividend date is September 24th, with the payable date being September 29th. Now, SCHD is a position in my personal portfolio, and it's a position in a lot of dividend growth investors' portfolios. So in this video, we're going to be analyzing the most recent dividend increase, looking at how it shapes up versus the historical dividend payments for SCHD, and then of course, seeing what this dividend payment actually means for me and my personal portfolio. If you'd like to be able to download this SCHD dividend growth spreadsheet for free, then you can do so at the link in the description. So let's go ahead and jump in. Now, when we look at SCHD, we can see it's certainly been an underperformer, at least on a price return basis over the last year. Year to date, it's pretty flat if you don't include the dividend payments. And this is one of the reasons some people have been somewhat frustrated with SCHD over the last year, especially during the midst of a bull run. But here's where SCHD has been very good. It's continuing to grow those dividend payments and also sustaining a relatively high dividend yield. For example, it's very rare to see a stock that has a starting yield of about 3.76% grow its dividends as fast as SCHD has. For example, if we jump over to the dividend breakdown sheet from Ticker Data, let's come up here and look at SCHD. We can see all this dividend data will automatically load into our spreadsheet. And look at the growth of these dividend payments since the fund's inception right at the beginning of 2012. We can see the first dividend payment was about 4 cents per share. And now just a little bit over a decade later, we're learning we're getting dividend payments as high as 26, 27 cents per share. So in that amount of time, the amount it's paid out in dividends has more than 6x'd. That's a very impressive accomplishment, and we'll talk about what they've done to actually achieve that here in just a little bit, but let's just take some time to actually look at the historical dividend growth. Now, the average yearly dividend growth since inception is about 11.57%, and the average yearly dividend growth since 2018 is coming in at above 13%. That is mind-blowing dividend growth. Now, if we look at this most recent dividend increase for Q3, we can see if we compare it to the most recent quarter's dividend, it is a little bit of an increase. But when it comes to funds, when it comes to ETFs, comparing it to the most recent dividend payout is not the best way to actually judge the increase of the dividend. And that's because, again, this is a fund. It holds different holdings within its portfolio, and these holdings have different payout dates. So because of this, we want to compare it on a year-over-year basis. So here's the Q3 2025 dividend payment. Here's the Q3 2024 dividend payment. So the quarterly year-over-year dividend growth came in at about 3.54%. Now, what we can do is analyze what these first three dividend payments look like compared to previous year's first three dividend payments. And that's exactly what I've done over here. So far through the first 3 quarters of the year, the dividend growth for SCHD compared to prior years is about 5.42%. Now, they still have another dividend payout in Q4, which could easily bump this number up even more, but that's a decent start, especially considering last year's dividend growth was extremely high at about 14.3%, and also considering that the last 4 years, 3 of the 4 years, dividend growth was over 14%. Now, like I mentioned earlier, SCHD is a holding in my personal portfolio. And like always, I want to be transparent and talk about what this actually means for my personal portfolio. So let's talk about my SCHD payment. Now, right now, I own 3,588 shares of SCHD. So right now, I own 3,588 shares of SCHD, and with this most recent dividend increase, if we multiply these two numbers, we can see my dividend payout will be about $934.32. Now, the real magic isn't in the amount SCHD is actually paying out right now, even though they do have a relatively high starting dividend yield, sitting close to 4%. The real magic is when SCHD grows those dividends and when you reinvest those dividends. Let's start by looking at the power of reinvesting those dividends. We can see here's my SCHD dividend, and as of right now, here's the actual SCHD share price. So simply by reinvesting my dividends, I'm going to be able to buy 34 more shares of SCHD, which again will continue to grow my dividend payment. In fact, their trailing 12 months dividend is sitting at about $1.04. So simply by reinvesting those dividends on a quarterly basis, I'd get about $35.46 added to my annual dividend income. And if we look at it on a yearly basis, it'd be about $141.85 added on to my annual dividend income. So that's money that would come to me every single year and will be growing every single year. For example, if we jump over to my dividend dashboard, we can see right now my expected yearly dividend income is coming in at over $7,083. Well, simply by reinvesting my SCHD dividends on a yearly basis, this will jump up to over $7,200, and it's going to continue to climb higher every single year. But what's even more impressive is how fast SCHD grows those dividends. This is what I really love. Assuming SCHD gets close to its historical dividend growth like we just saw of around 12%, here's my yearly SCHD dividends. With that dividend growth rate, SCHD would increase the amount it pays me over the next year by $447.78, and this number will continue to climb higher and higher as the compounding effect continues to take place. So when we consider both of these factors, reinvesting dividends and also dividend increases, my added yearly income simply from those two factors without me actually adding more capital is almost $600. You can see why SCHD starts to be attractive from a dividend growth perspective. Now, the question I always see and a point of confusion in reality is, how does SCHD actually achieve such consistent high levels of dividend growth? And that's a great question. And this was something I talked about in an article over on Seeking Alpha not too long ago. And this is an image from my friend SCHD Stan over on Twitter. Every single year, SCHD goes through what's known as reconstitution. This is where they select which stocks should be in the fund. And this is completely decided by an algorithm. There's not fund managers picking which stocks should be in. So when you see a new stock come in or an old stock go out, there's not really anyone to criticize. It's due to an algorithm, and historically speaking, this has been a quite efficient algorithm. Really, the right word is methodology. So we can see their stock universe. They select stocks from the Dow Jones U.S. Broad Stock Market Index, not including REITs. Now, why is this a big deal? Well, this is a big deal because over different time periods, the Dow Jones U.S. Dividend 100 Index has actually outperformed the S&P 500. Now, that obviously hasn't been the case in the short term with a huge tech run-up, but over the long term, it has been the case. And so while it's easy for people to hate on SCHD while tech stocks are roaring, it's continuing to do exactly what it's designed to do, and it has more of a history than you'd think, even though the fund was incepted back in 2000, even though the inception of the fund was actually late 2011. There's more of a track record there than you realize when you account for the underlying index it selects stocks from. But after it selects the stocks, it has 3 initial screens. It looks for 10 years of consecutive dividend payments, a minimum market cap of $500 million, and 3-month average daily trading volume of about 2 million. Once they've done that, they rank them all by yield. Stocks passing initial screens are ranked by indicated annual dividend yield, and only the top 50% are eligible for selection. This is the key point right here. Because SCHD goes through this process every single year, it might dump some of the stocks that have done well, their share price has gone up, but as a result, their dividend yield has gone down, so they dump those stocks in favor for stocks that have higher starting dividend yields. This is what allows them to continue to grow those dividend payments every single year at a high rate. But once they've done that, they do a final composite ranking by equal weight composite score on free cash flow to total debt, return on equity, indicated annual dividend yield, and their 5-year dividend growth rate. So again, it's a combination, buying stocks that are growing their dividends at a high rate, along with selecting stocks with the highest yield every single year, which helps artificially boost that dividend growth. On top of this, they only select 100 stocks for the index, with a 4% cap per stock and 25% sector cap. Stocks that are already in SCHD are retained if they remain in the top 200 by composite score. So when you understand the actual methodology behind SCHD, and you also understand the underlying index that has done so well over the past 20, 25, even 30 years, it becomes a lot more clear why so many people are attracted to SCHD as a dividend and dividend growth play. On top of this, it's also important to note that yes, SCHD's year-over-year quarterly dividend growth was about 3.54%, but if we look at some of their comparables, for example, VYM, and look at their most recent dividend, we can see it came in at about 84 cents. But if we look at the Q3 2024 dividend payment for them, it came in at 85 cents. So on an annualized basis, their Q3 dividend payment actually was reduced slightly. If we look at DGRO, another dividend growth fund that I am a fan of, you can see the exact same is true. Their most recent dividend payout, about 37 cents. But if we look at their Q3 2024 dividend payment, it was about 40 cents. So really the point I'm trying to make is SCHD is still doing exactly what it's designed to do. And it has a great track record of dividend growth over the years. Look at this year-over-year dividend growth since inception: 12.2, 3.7, 13.9, 10.8, 17.64, 19.7, 7%, 7%, 9.7, 9.5, 15.83, and 11.58%. This is what causes the dividend snowball effect. So depending on what your goals are as an investor, SCHD could still be a good option. Now, if you're anything like me with a long-term time horizon, definitely take advantage of stocks that have a lot of earnings growth and potential to grow those dividends at a high rate over time. For example, Microsoft is in my portfolio, Visa, ASML. These are all positions growing free cash flow at a high rate and as a result, growing dividends at a high rate as well. But from a sleep well at night perspective, it really is hard to beat SCHD. So go ahead and let me know what you think in the comments down below. If you'd like to be able to download this SCHD dividend growth spreadsheet for free, then you can do so at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.